So we are going to see what is capital budget. Okay, a capital budget is a plan for raising long-term funds for investment in non-current assets. Okay, so we draw capital budget to know the long term, when we want to raise long term funds from from investments and all that. Then we will draw up a capital budget when we want to take out a bank loan, if we want to take uh, funds from external parties. So we will record all that in capital budget. Okay. When a business starts up, it will need capital. So before a business starts up, they need capital. So for that capital, they may take out a bank loan, they may ask for venture capitalist. So like that, they will raise funds. So we can write them in capital budget. Okay, and also it will need capital in order to start operating. So before starting a business, they need capital. It is this capital that forms the capital budget of the new business. So when we want funds from other people, when we take out bank loans, all that. So these are forms of capital. So we will record all these in our capital budget. Did you understand that?
Yeah, I understand that.
Okay. Now look at this. Now, budgeted statement of comprehensive income and statement of financial position. So, even in budgets, there is a statement of comprehensive income and SOFP. So, having prepared the different budgets, the end of the budgeting process results in the preparation of the budgeted financial statement. So, after preparing budgets, sales budget, purchases budget, all those budgets, at the end of the period, we will be preparing statement of comprehensive income plus statement of financial position also. Okay, and then okay, these are two things that we will prepare. These are often referred to as the master budget because it refers to the master plan for the business over the forthcoming financial period. So this statement of profit or loss plus SOFP, both are known as master budget because it refers to the master plan for the business over the financial period. The budgets are prepared from the information in the other budget. So now we will prepare the budgets based on now SOFP and statement of profit or loss. We will look at other budgets that we prepared before, from sales budget, purchases budget, production budget. We will take information from that and prepare these budgets. Okay, and also they follow same format as other financial statements. So like we prepared before for company accounts, all that. So it's the same format only here also. And the key difference is that budgeted financial statement do not contain historical data. So the difference is the financial statements do not contain past data, but are a forecast of future financial performance. So it's an estimate of future financial performance, not past data. Did you understand that?
Yeah, I understand that.
Okay. Now look at this. So we'll study flexible budgets now. There are two different types of budgets. First one is fixed budget and then flexible budget. So now we'll see the difference. The fixed budget shows only one level of activity of production. So only one level of activity of production, while flexible budget shows the situation for different levels of activity. Okay, so that's the difference. Fixed budget shows only one level of activity of production, but fixed budget shows the situation for each and every different level of activities. Okay, so I'll just summarize this and explain you. They are saying so the actual level may vary from the budgeted period, okay, when we forecast. And flexible budget will adjust these to reflect any changes in the number of units produced, whether it has increased, whether the cost has decreased, okay, whether the cost has increased or decreased, or changes in production capacity, all that, okay. And in other words, the variable cost element are revised or flexed. Okay, this means that different cost behaviors are allowed for and changes are made as the volume of activity changes. So when the volume of activity changes, changes are also being made when we are flexing the budget. Did you understand that part?
Could you repeat it again? Because your voice was breaking. My connection's not really good today.
Okay. Okay. So in other words, the variable cost elements are revised or flexed. So this means now different cost behaviors are allowed to add changes are made. Different cost behaviors are allowed for and changes are made as the volume of activity changes. So it means now when the volume of activity changes, then we are preparing flex budget in order to adjust these changes. Did you understand that?
Yeah, I understand that.
Okay, so now when preparing a budget, management will estimate the maximum output that can be achieved. Okay, if the firm operates at a lower percentage, okay, so how will they achieve this? Okay, and then to measure the performance against the target, they will measure the performance against the actual target, okay, whether it's realistic or whether it is unrealistic, okay, and and any difference they will change them. So that is the purpose of flexible budget. Okay, so we can estimate this volume variance. Okay, we can adjust this volume variance and we can do all that. It's flexible. Okay, did you understand what does that mean?
Yeah, I understand that.
Okay, since a flexible, okay, so they are in that what they are saying is based on different levels of activity, cost must be analyzed into fixed and variable cost. Okay, so that we can separate different expenditures. What are variable cost? What are fixed cost? Okay, so flexible budget is based on different activity levels. Okay, and it will be analyzed into fixed and variable cost. Okay, so that each different levels of activity we will be able to know what are the fixed cost in this level of activity, what are the variable cost at this level of activity. Okay, so flexible budget will do that. And also the fixed overhead budget will of course not change. So anyhow fixed overhead budget will not change. However, revenue budgets would change with the production activity when the production activity level changes. So okay, so the flexible budget, when we are preparing, a business will be able to change, adjust these values, okay, and they will be able to measure the performance and all that they're saying. Okay, and by flexing the budget, it is possible to overcome the actual results with the revised budget. Okay, revised budget is the flexed budget. So we will be able to compare the difference so that we can, give a better conclusion. That's all in this flexed budget. Did you understand this?
Yeah, I understand that.
Okay. And also another small part they're saying flexible flexing relates to a revision of the variable cost element. It recognizes that there are different cost behavior patterns. So flexible budget will be able to, when we are preparing flexible budget, we will be able to recognize the cost behavior patterns. Okay. Therefore, we can do some changes, okay, for the volume of activity or volume of activity or the unit costs. Okay. So we will be able to make predictions and all that. Okay, and then here we'll study cash discounts. In this, they are saying when calculating budget figures relating to sales and purchases, it is necessary to account for any cash discounts given by the company. So when we are preparing budgets, if there is any cash discounts, then we will do some changes. Even cash discount we will have to consider when we are preparing budgets. That is what they're saying. Did you understand the whole thing now?
Yeah, I understand the whole thing.
Okay. So evaluate the suggestion of the production director of Hercules PLC. So for the suggestion, they are saying this would be an efficient method to produce 100,000 units in one production run, all in one production batch. So it will be efficient when they produce this. Producing the 100,000 units in a number of production batch would involve many setup costs. Okay, so first point they are saying it would be this method would be efficient because we are producing in one batch. So secondly, they are saying when this 100,000 units is produced in number of production batch, then it would involve many setup costs. Okay, so and also there may need to be over 10 production runs using the existing method. Okay, but if they produce in one shot, one production batch, then they would not incur any setup cost and all that. So that's why this is an advantage. Okay, after that they are saying this would save management time. Okay, because they don't need to draw up many production budgets for this product, and they don't need to schedule when the production run will take place. Okay, um, so this would save them time, and also the disc brakes will not deteriorate or perish if held for a long time. So they can produce this 100,000 units in one batch, and they can keep this for a long time because it will not perish or deteriorate. Did you understand this part?
Yeah, understood that part.
Okay, against the suggestion, they are saying producing 100,000 units all in one production would result in higher inventory holding stock. So lots of it would like we have to produce, so we have to stock them. So stock holding cost will increase, and also sometimes we won't have space to uh, keep those stocks. Okay, so they will incur high stock holding cost. Plus, they are telling they may not have enough warehouse space, so they won't have enough space to store this 100,000 units. That's the disadvantage of this. Okay, for evaluation, you can tell Hercules should or should not produce. So it's based on your idea. So you can tell they should produce 100,000 units. If not, you can tell they should not produce this also. But if your advantages is more, then you have to tell they should produce. If your disadvantage, when you are writing, when you give more disadvantage, then you have to tell they should not produce. So these are the things that you need to know. Did you understand this now?
Yeah, I understand this now.
Okay. So now let's do the correction in this question. Now the method that you have done is different, but then you're getting the same answer. Instead of that, there's an easy method. Now look at this purchaser's budget. The value that you got for purchaser's budget for April, May, June, July, all is 27,000, right?
Yeah,
So 27,000 into 40% will give you 10,800. Okay.
okay,
And 27,000 into 30% will give you 8,100.
okay,
And 27,000 into 10% will give you 2,700. But
okay,
you also have done, you have got the correct answer, but it's a different method. For 10,800, you have done 40% into 50, and then that answer into 540, then 10,800. So for 8,100, you have got 30% into 50 into 540. So instead of that, I'm telling directly take the answer from purchaser's budget, that is 27,000 into 40%. So directly for May, June, everything is 27,000, right? So 27,000 into 30%, 27,000 into 10%. Did you understand that?
okay.
Okay. So like that also you're getting the same answer. Now in your answer, this first part is correct. That is 1 month credit. So that is B. So here you have got correct 10,800. So here also 10,800. Every month it's 10,800. Same. Okay, so this is done. 10,800. And then so Burley is done. So now look at Crystal. Crystal give 2 month credit and supply 30% of boilers. Okay, so 27,000 into 30% is 8,100. So in April, the value is same, 8,100. And then they are paying after
Why?
2 months. Yeah.
Yeah, so Why do we write on the April? Why do we write 8,100? Since we are not paying, right?
Yeah, but then 27,000 into 30%, right? The same,
Yeah.
this 8,100, we just record it on the April. Okay.
Ah, okay.
This 2 months credit, after 2 months we are paying. So into 2, this 8,100 into 2, that is 16,200. So 16,200 comes under May, and 16,200 comes under June, and same 16,200 comes under July, and it keeps on going like that.
Okay.
Okay, again. Okay, so 16,200 for every month after that. And then now see D, Diamond gives 3 months credit and supply 10%. Okay, so 27,000 into 10% is 2,700. We put that under April. Okay, and then this thing, May. So just into 2, because it's only 2 months. So 2,700 into 2 is 5,400. That we take under May. And then June, 3 months credit. So then only we will pay. So 2,700 into 3, which is 8,100. So after June, that 8,100 keeps on same. Keeps on repeating. So July also 8,100. August will also be 8,100, like that. Did you understand that?
Yeah, I understand that.
Okay, so after that, at last you have to just get the total answer. You have to add everything. 10,800 plus 8,100, 2,700. Then 21,600. Like that, you have to get the total for each month. Okay, that's all
Okay.
in this answer. So in this question, theory part, they are saying evaluate the terms on which purchases and sales are made by QPKS Heating PLC. Okay, so we have to tell whether whether the credit term that they are offering is good or whether it is not good. Okay, so like we have to evaluate and write. Okay, so for the term for purchasers, we can say there are a range of terms offered, which means QPKS Heating PLC do not have to pay for all purchases in one go. So at one time itself, at the same time, they do not need to pay at once. Okay, at the start of trading for this store, if they are given credit, 2 or 3 months credit allows QPKS PLC time to sell boilers before they need to pay for them. So now when the supplier is giving 2 or 3 months credit, then they can that time in that time period they can sell the boilers and get the money and then pay them later after 2 or 3 months. So they can make money at that period of time and pay the supplier later. So that is the advantage for them of having 2 or 3 months credit period. Did you understand that?
Yeah, I understand
And
that.
also, at the same time, they do not need to pay at once. Also, they can pay later. Okay, so at once they don't need to pay uh, a big amount. Okay, and also they are saying 50% of sales for cash generate an instant cash flow after a sale. So 50% of sales, cash sales will generate an instant cash flow. Okay, and 6 or 7 months to pay for a boiler will generate sales, especially as items are expensive. Okay, so when we are paying later, it will generate sales because items are so expensive and all that. Now, against the term, 60% of all purchases need to be paid off within 1 month. Okay, so because 40 plus 50 ACME sell only for cash, and it supplies 20% of boilers. Okay, and Berkeley give 1 month credit and supply 40% of boiler. So 40 plus 20 is 60. Okay, so that 60% of all purchases need to be paid within 1 month. So even that 40% they have given only 1 month credit period, right? So within that 60% have to be paid within 1 month. Did you understand why it's 60%?
Yeah,
Okay. Do you
because
want,
it's yeah.
yeah. Do you want me to explain that again?
Uh, no, I understand.
Okay. And then 50% of all sales do not have payment complete until 7 months after the sale. So 50% of all the sale, like the can't take the total value, right, until all sales have been done. Okay, so
Yeah.
that's the disadvantage. And then for evaluation, you can you can give a conclusion based on the arguments that you gave earlier. Okay, and yeah. So you can tell, given that the markup, they're saying markup of QPKS heating pills is 80% and all purchases are sold within the same month as purchase. Okay, so cash flow will not be a problem because the markup is 80%. Okay, that's all they're saying. Do you have any doubts here?
No, 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 no doubts.
Okay. So in this question, they're saying you Glowtherm PLC is considering using flexible budgets when preparing budgets. Evaluate the possible use of flexible budgets for Glowtherm PLC. So you can tell flexible budget allows good decision making. Okay, like is compared to like. That means good decision making has like is compared to like means now costs can be compared to revenue at the same sales or output levels. Okay, so they can compare both and see, and it allows for good decision making. When we are comparing both, we can make good decisions. That is what they are saying. And then they are saying flexible budgets may save Glowtham PLC time and money because they allow management by exception. Do you know what is management by exception? I explained you earlier. Do you know what does that mean?
Yeah, so management by, shall I explain?
Yeah, explain.
So it's like when there is a difference between expected and actual results.
Okay.
So yeah, something like similar to that, right?
Yeah, but it's not correct. Okay, management by exception means management will take action. Okay, management by
Ah, okay, yeah.
exception. Management will take action if they understood that any variance should be corrected. If they compare both and if they understood that the variance is adverse or the variance should improve, then the management will take actions to correct them, to improve them. That is management by exception. Did you understand that?
Yeah, I understand that.
Okay, so the next thing that they are saying is the targets. So in the second point, they're saying flexible budget will save time and money because they allow management by exception, because the management will take action if they understood the variance is bad and all that. So this flexible budget will save them time, okay, and money, okay, by allowing this. The third point that they're saying is the targets are realistic if the budget is flexible, and this may improve the motivation of low-term PLC employees. Okay, so the targets that they are setting should be realistic. It's not unrealistic. Okay, unrealistic means it's like the that they are setting should be achievable. Okay, they can't set a target where that target is not achievable. Something that is not achievable, they can't set that target. So something that is achievable only they have to set. Even targets, even estimates, all that they have to set where by knowing that they will be able to achieve this. Something unrealistic they can't set. So they are saying flexible budget will help the management to set a realistic target, okay, because the targets are realistic and flexible budget. So this will improve the motivation of the employees. Did you understand that?
Yeah, I understand that.
Okay, Glowtham PLC is a new company and they may not be sure exactly what the predicted sales volume will be. So now this company is new and they are not sure of what the predicted sales will exactly be. So producing one budget for a possible output level will not be helpful. Okay, so when the budget is flexible, then it will be helpful for Glowtham PLC as it is a new company. And also any variants are more meaningful if the volume element is eliminated. So if the units part is eliminated, then any variants are more meaningful. And then for case against, they are saying drawing up a series of budgets at different output levels will take time, which may cost Glotherm PLC money. So, drawing up lots of budgets at different level of output will take my time, and it will also be costly for them. And they're saying figures are only estimates, so it may be misleading. And also action taken in response to that sometimes will be inappropriate and all that. So for conclusion, you can tell flexible budget is a useful tool because they have lots of advantages. Did you understand the whole answer now?
Yeah, now I understand the whole answer.
Okay. So in this question, May 2023 question number 2, opening inventory is correct. Now you have to add purchases. Okay, so I showed you the format, right? Opening inventory plus purchases minus sales and then closing inventory. I showed you the format in the question paper, right?
Yeah, yeah.
So opening inventory is correct. Now purchases plus purchases. So, uh, So in this question, opening inventory is done. For purchases, they haven't given any information in the question, right?
Yeah.
So what you have to do, this is the balancing figure. You have to take sales unit, closing inventory, and then the balance, you have to take it for purchases. So I'll tell you how to do this. Did you understand what I told you now?
Yeah, I understand that.
Okay. So now opening inventory is done. So now sales unit. Okay. Yes, what is sales unit in this question? For September, it's 8 into 4, right?
Yeah.
Because look at the question. In the question, they're saying, uh, September, they will sell 8 gardens a week. So there are 4 weeks for a month. So 8 into 4. So 8 into 4 is how much?
It's 32.
32. So for sales, put 32. And they should be in brackets. So show the working, okay? You have to write 8 into 32, okay? Sorry, 8 into 4.
Okay.
8 into 4. And then for October. October, they are saying 6 garden sheds a week in October. So 6 into 4. So 6 into 4 is 24. Did you understand all this?
Yeah, I understand that.
Okay, write the working. And then for November, they are saying 4 garden sheds a week in November. So 4 into 4, which is 16. And then for December, they are saying 2 garden shed a week in December. So 2 into 4, which is 8. So I'll write only December's working. That is 2 into 4. Now let's look at the closing inventory. So after that, you have to balance and take the missing figure for purchases. Did you understand that?
Yeah, I understand that.
So now closing inventory, what you have to do is, can you remember before and all earlier we used to remember like this. September's closing inventory will be October's opening inventory. October's closing inventory will be November's opening inventory. November's closing inventory will be December's opening inventory. Can you remember that?
Yeah, I remember that.
Okay, so what you have to do, opening inventory of October is 12. So closing inventory in September will be 12, right?
Yeah, it'll be 12.
Okay, now look at this. Opening inventory of November is 8. So closing inventory of October will be 8, right?
Yeah.
Correct. And then opening inventory of December is 4. So closing inventory in November will be 4, right?
Yeah.
In December, what will you do? Sorry, for December, what will you do? You have to look at
We
January's
need to
figure.
take the January. Yeah.
Okay. Look at the question. In January, they are saying, okay. So in the question paper, they are saying each store will sell two garden sheds a week in Jan 2024. So 2 garden sheds a week in Jan. So 4 weeks for January. So 2 into 4, which is 8, right?
Yeah, 8.
Okay. Um, But then they are saying, okay, so 8. But then you can't take 8 because in the question they are saying at the start in B part or top of B part, look at that. At the start of the month, each store will hold an inventory of garden sheds equal to the sale of 2 weeks of that month. So what you have to
Yeah.
do, just 2 into 2 only you have to take because only 2 weeks. Did you understand? Instead of 2 into 4, it's 2 into 2. Did you understand?
Yeah, I understand that.
So opening inventory for Jan will be 4, right? 2 into 2. Did you understand that?
Yeah, I understand that.
So opening inventory in Jan will be 4. So if it's 4, closing inventory in December will be 4, right?
Yeah, it'll be 4.
Okay. So this January separately show the working and then now take the missing figure. So okay, do you know how to calculate the missing value?
Yeah, so 16 plus x minus 32 equals 12.
Yeah. Okay. Get all the values for September, October, November, December. So that's all in this answer. Okay, this is how you have to do. Do you have any doubts?
No doubts, no. I understand it now.
Okay. So in this question, they're saying you evaluate the usefulness of information and communication technology, ICT, in the preparation of budgets. So they're asking how will ICT help a company to prepare their budgets? Okay, so case for using ICT in budget preparation. So when a company uses ICT when preparing budgets, it will save them time and money also. Okay, because when they prepare budgets by hand, then it will lots of staffs needs to be employed, and then when we implement the ICT system, then we don't need to employ staffs. The computer will do things for us, so staff costs are reduced. So that's why ICT saves time and money. Did you understand that?
Yeah, I understand that.
Okay. And ICT, when we are using ICT, the need to have papers and books is eliminated. So we don't need to record the budgeted figures in books, in papers. We don't need to do all that. It's eliminated. We can do it by ICT, by computer itself. So it will save time. Not time, it will save money, and this will save space also, because rather than keeping books and papers, so that will save space also. And then they are saying spreadsheets can be used for quick calculations in budgets. Okay. And then spreadsheets can be used to display budgets in a pre-prepared format of choice. So we can use spreadsheets to display budgets in the format that we want, okay, that the company wants. And then flexible budgets could be speedily produced, so they can produce faster. Okay, flexible budgets by changing, the important variables in the spreadsheet, like all that. And then spreadsheet can be used to generate graphical information also. Okay, so these are the advantages of using ICT in budget preparation. Now we'll look at the disadvantages. They are saying financial cost of hardware. So to buy hardware, okay, to implement new software system, okay, to bring in the latest software technology, all that will cost money, and we need to train staffs to use ICT in preparing budgets. And there'll be running costs, maintenance, like if there's a breakdown or anything, okay, and if you want to maintain the computers and all that, it costs lots of money, right? So that's why finance cost is very high, okay, for ICT. Did you understand this?
Yeah, I understand that.
And hardware has a relatively short life. Software needs updating. Okay, so they need to update software, and new staff needs to be trained. Okay, and there may be maintenance issues and all that. So this is very this is a drawback for the company. And then they're saying if staffs are not trained or if they are unskilled, then they can make errors. So it will lead to incorrect budget. So these errors will also take time and money to correct them. Okay, and there may be security issues also. Okay, if the management of the company wants to keep the budgeted information confidential, then security is important. Okay, so so they have to like sometimes like safety means outside hackers can get access to this sensitive information. So they have to control that. Okay, they need to implement new security systems and all that. So this will also be costly. And sometimes internal staffs can gain information. So lots of security control needs to be implemented when they are doing this ICT system. Okay, and also sometimes there may be computer crashes. Okay, power cuts, freezers, power cuts. So this will all when this happens, it will so sometimes the budgeted information can be lost. Okay, the it can completely disappear. So in that case, it's a waste of time again to prepare them again. To do that, it will waste lots of time, and sometimes the backup copies must be kept. So these are things that they need to consider when they implement ICT in budgeting. Did you understand all this now?
Yeah, I understand now.
Okay, now conclusion, like you can say ICT is very advantageous in the preparation of budgets because definitely it's advantage. Okay, it's an advantage for them. Do you have any doubts to ask?
Not in ICT.
Okay. So in this question, they're saying Magic Carpet PLC has prepared its budgets in the order shown below. That is sales of rugs and then revenue in pounds, production of rugs, extract of cash budget, that is amount paid to labor each month, and then material purchases in pounds. Okay, so now they are saying you to evaluate whether the order of drawing up budgets shown is a suitable order for Magic Carpet PLC. So they are asking whether this order is suitable for them or not. Okay, so what you can say is you can tell arguments. Look at my screen. Arguments for the order shown. So for the order that they have shown the question paper, for that, if in favor, if you're talking in favor for that point, then you can say preparation of budget should start with the likely number of sales units. This is known as a critical or limiting factor. Very often, the number of sales unit will determine the figures to be included in the other budget. So, in this question, in this past paper question also, they are preparing like that, right? Sales unit and then sales value. So, the order that they have done is correct, right?
Yeah.
So this is good. Okay, and then they're saying the next step would be to prepare a budget showing expected sales revenue. So that is also they have done. And then the preparation of the production budget would be next. Okay, this would be prepared using the number of units expected to be sold. So the number of units expected to be sold, based on that, they will prepare the production budget together with the planned units for opening and closing inventory too. Okay, so like that only they have prepared even in this question. Okay, they have told us to prepare. The next stage would be to prepare budgets for inputs such as raw material purchase and possible even labor. It is possible that the amount paid to labor goes straight into the cash budget. Okay, so all this. Now we'll look at arguments against the order. So it is possible that the amount paid to labor each month could be shown in a separate labor budget instead of including cash budget. So in cash budget itself, the amount paid to labor they have included. So in this question, when you are doing the answer, you will notice that in the cash budget itself, they have included the amount they pay to labor. So they are saying it is wrong. You have to, it's better if they show it separately in labor budget. Did you understand that?
Yeah, I understand that.
Okay, now the other part is it is likely that the material purchases budget in pounds is drawn up before the figures calculated are used in the cash budget. The cash budget is likely to be the final budget drawn up after all other budgets have been prepared. That means now look at in the question paper C part. They are saying you to prepare cash budget first, and then only in the D part they are saying you to prepare material purchase budget. But then here they are saying it's better if they draw up the cash budget at last. So first should be material purchase and then only cash budget. Did you understand that second point here?
Yeah, I understood the second point.
Okay, that is what they're saying. And then for evaluation, they're saying the order shown is generally correct. The only condition, the only proviso, the only condition is that it would not be possible to complete the preparation of the cash budget without further figures being supplied. So they're saying the order is generally correct. The only condition is that it would not be possible to complete the cash budget without any further figures for that. Did you understand this now?
Yeah, I understood.
So you can give your own conclusion also for this.